Hello everyone, welcome back to our channel. Today we will cover all the 6 test your understanding questions from the chapter Specialized Area. Let's dive in. So the first up question is about CA Lalita. She is the auditor of a company and has been offered an additional professional engagement to audit financial statements prepared specifically for a loan agreement. She has decided to accept this engagement and disclose this fact in emphasis of matter paragraph in the audit report to be issued by her. So, what do you think? Is her approach proper? In this given situation, the approach of CA Lalita is proper as there is no restriction on accepting such an engagement, even if she is the auditor of the company. Moreover, her decision to disclose the fact in the emphasis of matter paragraph ensures transparency and clarity in the audit report. Next, we have CA Lakshmi, who has prepared a draft audit report for X Limited. The financial statements follows the provisions of a contract with Y Limited. She has drafted an unmodified opinion but also highlighted the basis of accounting in Note A to the financial statement. Now, how can she ensure that her report is not misused? So, let's figure it out. She may consider it appropriate to include a restriction on distribution and use to clarify that the audit report is intended only for specific purpose or specific users. Here's a simple sample paragraph she can include. Basis of accounting and restriction on distribution and use without modifying our opinion. We draw attention to note A, which describes the basis of accounting. The financial statements are prepared to assess the company with the financial reporting provision of the contract referred to above. As a result, the financial statement may not be suitable for another purpose. Our report is intended solely for X and Y Limited and should not be distributed to or used by parties other than these two. Moving on, CAM Shaurya is the auditor for an entity's financial statement prepared as per contract specific reporting provision. Okay. Now, he's offered an audit engagement specifically for trade receivables appearing in above financial statements. Can he accept such an engagement? So, yes, he can accept the engagement. However, since the financial statements follow a special purpose framework, he must comply with both SA 800 and SA 805. His audit approach should ensure that the trade receivables audit aligns with these standards while considering relevant risk and audit procedures. Next, let's discuss CAG's case. He has been offered an audit engagement for trade payables of a company. However, the company's overall financial statements prepared under the Companies Act are audited by Jignes. Why would this be practically difficult for G? Performing an audit on a specific element of financial statement without auditing the entire set can be challenging. Since G lacks a comprehensive understanding of the company's overall financial position, internal controls, and reporting environment, obtaining sufficient and appropriate audit evidence might be difficult in this scenario. This could lead to disappropriate audit reports for a single element. Therefore, he should consider discussing alternative engagements with the management. Okay. Next, we have CA Madhur. He issued a audit report on financial statement dated 15th June. However, he later issued an audit report on summary financial statement dated 15th July. Does he have any additional reporting responsibility? Is the question that we need to figure out. The audit report and summary financial statement derived from audited financial statement is dated 15th July of that particular year. Since the summary financial statement were reported later, the auditor must state that they do not reflect any events occurring after June 15th that the original audit report did. This ensures that our users understand that subsequent events are not considered in the summary financial statements. One more for CM Adur. If his audit report on the full financial statements contained a qualified opinion, can he issue an unmodified opinion on the summary financial statement derived from them? So, to answer this question, not entirely, if the summary financial statement fairly represents the audited statements, he can issue an unmodified opinion. However, he must mention the qualification in the original audit report and describe its impact on the summary financial statement. His report should include a statement that the full audit report contains a qualified opinion, and second, the basis for the qualified opinion and its effect on the summary financial statement. And that's wrap up today's episode. If you find this video helpful, don't forget to like, share, and subscribe for more insightful content. See you in the next one. Thank you.